Good afternoon, traders. This is Isaac from Trade Simple, Trade Smart, and this is the 25th of August 2015. What I wanted to do is a quick run through with an assessment of a few markets to see what's happening, a higher picture perspective, especially as we come out of the summer months into the autumn months where we expect volatility to come back in and activity to pick up. So first thing I was looking at was the Dow Jones. I mean, we've had massive declines over the last few days, and there's a lot of scaremongering to identify. Is this a potential crash? Is this a correction? I just thought it would be first market to look at. We have a simple perspective, which is that as long as the trend remains intact, we go in the direction of the trend. Right now, there's not sufficient evidence that this trend has come to an end, or that there is a trend reversal about to take place. That will happen over the next few weeks if it is to unfold. So this is a chart of the weekly here. We can see a massive move up that's lasted since February 2009. And what we see at the moment is just a very deep correction. If we look at it in isolation, looking at, say, the daily chart, we see this massive decline that's taken place. And that's pretty scary if you're on the wrong side of this. You know, billions and billions and billions have been wiped off the global stock market by people who were positioned long and took a hit as stocks plummeted. So if we look at this in isolation, it looks pretty severe. However, you've got to always look at things in context. And one of the problems a lot of retail traders have is looking at things from the right perspective. It's easy to focus on the immediate here and now and the small picture, but one thing you have to do is look at the bigger picture. Like, the bigger picture and the context determines everything. That tells you whether you're trading in the direction of the trend or trading a correction against the trend. And the distinction between the two is important. So if we go back to a higher time frame, what this tells us is that massive decline we saw on the daily chart is nothing more than a very deep correction. And if we put it into context, we can see that we've had a few deep corrections prior to this. For example, in 2011, there was a very deep correction at that time. So this isn't out of the ordinary. It is severe, but not completely out of the ordinary. So how do you treat this? Well, as long as it remains a deep correction and nothing more, then we can trade in the direction of that trend. The moment it becomes, we start to look for warning signs that it could be anything more than that, is if this level here, which is acting as support around 156.10, 156.100, if that price goes below this and remains below that, then from that moment onwards, then we can start to look for shorting opportunities and treat it as the beginning of a downward trend. Remember, the beginning of any trend reversal is the hardest to catch, so you may get it wrong a few times. The easiest portion of the trend to catch is the middle third. So if we look at, let's say, if we go back to this decline here, right, which was the financial crisis from 2007 to 2008. At what point would you have known that this was the beginning of a trend, or whether this was just a correction against this downward movement? Yeah, at this moment in time, that would have been very difficult to see, difficult to identify. The only time you'd know for certain that you're in an uptrend would be maybe around up here somewhere, yeah, at the very minimum around these levels. But at that moment in time, it could have seemed as though you'd missed the move, but look at what happens after that. Even if you got in over here, you still caught a chunk of the move, right? So maybe, it's the way I would say is the beginning third and the last third of the move, the trickiest to trade. The middle third is the easiest and the safest to trade. So always look for that. Okay, so if price goes below this level, then you can start to look for shorting opportunities and then treat it as a market reversal. Until then, the trend is still intact, so we're going to be looking for long opportunities and expecting this high to be taken out at some point. Bearing in mind also that seasonally that we come into a bullish period in the autumn months, from autumn to Christmas. So generally speaking, it's reasonable to expect a further move back up. Right? So that's a Dow. Moving on to other markets, I want to look at Eurodollar and Pound Dollar. Eurodollar, first and foremost, if we look at the lower time frame, like the daily, we can see that over the summer months, nothing much has happened by way of massive overall positions. things have just been moving sideways, and recently we've just broken above towards the end of August. Now, is this a move back up? Is this just a retracement before we continue this downward movement? It's difficult to say. My perspective is this: if we look at the bigger picture, I'm going to look at the monthly chart. We can see that we've got several declines that were followed by retracements, and this is no different. We've got a severe decline. Looks like this could be a retracement against this decline. So this has been the general pattern of price before. So we have to go with the general pattern. The general pattern tells us we get a significant move and a correction or a retracement. That's what's happened at this moment in time. There are a few things to look out for here. Firstly, we've got momentum to the downside, evidenced by the amount of red bars we're seeing. So there's strong selling coming in, okay, and that's pushed price down significantly. We've hardly had a green bar on the way back down. On the lows, we seem to be struggling to continue further down. We're moving sideways at the moment. So the key area to look for is this zone here highlighted in orange. This represents a potential blockage to price to prevent it from moving further up. There's a lot of support around here, so that could act as resistance. It is quite a wide zone. The other thing we look at, if I look at the weekly chart, is that this was the move down, and this is a sideways movement. We've made an attempt to push above it, but we failed. Or so far, it looks like we're failing. We'd have to see how price closes. But if price closes below these highs, that's a sign of weakness. Okay, that's a sign that the bullish move up is short-lived. So we're more likely to be successful in looking for short-term opportunities. If price holds above this level, then it could further move up to this point here. So from this above this level, we want to be bullish up until this zone here. This zone is a selling zone. It has been previously. We see there was a significant turn from here upwards, a strong buying coming in there, strong buying coming in here, turning the market direction dramatically, and a third time here. So since we've crashed through this zone completely, I'd expect there to be a retest of this level. I'd be very surprised if price went straight through this, but would expect some sort of bounce off here. The other thing we have is moving from the highs to the lows. If we draw a Fibonacci retracement using our Fib retracement tools, we can see the correction along the way. We have a 38.2, we've got a 50% at 61.8. We can see that these overlap in this area here. So we have a 38.2, we've got a 50%. The 50% is quite significant because generally speaking, if price retraces more than half of that move psychologically, a lot of traders look to sell when price has corrected half of its major move. So that would be an area to look for. So if price on whole maintains above these levels, then that's going to be an ongoing long until these highs. Until then, these are tricky waters we need to navigate. So we're looking for longs above here, up into this zone, looking for shorting opportunities further down. If we fail to stay above this level, then we look for shorting opportunities to the downside. That's on euro dollar. Moving on to pound, we have, again, looking at the higher time frame perspective, we've had this decline. Now, pound dollar is interesting in the sense that if I move on to the monthly chart, we can see that looking at this context, we've had a significant fall, which was during the financial crisis, 2007 to 2008. But since then, all we've done is move in a sideways range. Here are the highs, and here are the lows. So we're moving between these two extremes. We recently came off the lows, so logic would say then as a result we should be making an attempt for the highs. So we are bullish on this. I am bullish on pound dollar. The thing to observe is if we bring in a fib tool from the high to the low here. Okay. Last time it rallied up almost at the 50% level, but stalled. So until we take out this high and take out this 50% level, we need to assume that we're still going to remain in this sideways consolidation. All that's going to happen is we're looking for price to move between the highs here to these lows. Now looking at the lower time frame, say the weekly, what we can see is Here is the 50% retracement from the high to the low here. Here are some levels. And interestingly, we could see that first time we failed to meet that level and sold off. Second time we went up slightly higher but sold off from there as well. If we go back in time, we can see this was a low, previous low, previous low. So there seems to be some support around this area, and it's acted as resistance here. Same thing could happen. So the way I'd treat this is, if we do push above these levels here, then I'll look for longs until the previous highs around here, these levels. So there should be a clear few hundred pips of upward movement here. If we fail this level for a second time, then that could be a short-term opportunity. How far down it goes will be difficult to say, but there should be at least a few hundred pips worth of movement from there. So this is the key level to watch, around the 158, 157 to 159 sort of zone. If we clear those levels, then we're looking for longs up until these previous highs. So that sets things in motion. Those are that puts a few of the currency pairs into context. Always look at the higher time frames, especially as you come to the end of the month, to set things in motion for the next few months. It depends obviously on your trading style. If you trade, if you're a day trader versus a swing trader, but nonetheless, looking at the higher time frame perspective will also let you assess which way the people with the deepest pockets are moving. All right, so that's it in conclusion. Speak soon, and hope you found that useful.